Why Warren Buffett Bought Ulta Beauty, analyzing the stock. Today, we're diving into why Warren Buffett and Berkshire Hathaway bought Ulta Beauty stock. Now, whenever Buffett makes a purchase, it's worth paying attention. So in this video, we're going to analyze the company's performance, look at some key financial metrics, and see how the stock stacks up in terms of valuation and solvency. Let's get started. Revenue and profit growth. First up, let's talk about Ulta Beauty's revenue and profit growth. Over the last decade, Ulta has been on a tear, growing its revenue from $2.2 billion in 2013 to a whopping $11.3 billion in the trailing 12 months. That's an impressive compound annual growth rate, or CAGR, of 15.9%. But what about profitability? Well, Ulta's operating income and net income have grown even faster than revenue, with CAGRs of 17.2% and 20.1%, respectively. This shows that not only is Ulta bringing in more money, but it's also getting better at converting those sales into profits. Per share data. Now let's move on to the per share data, an area that really matters to us as investors. Ulta's earnings per share, EPS, have skyrocketed from $2.68 in 2013 to $25.64 in 2024, which translates to a compounded growth rate of 23% per year. This rapid growth in earnings per share is largely thanks to Ulta's aggressive stock buyback program, which has reduced the number of shares outstanding from 64.4 million to 48, a 2.3% annual decrease. On the flip side, Ulta's book value per share has also shown solid growth, increasing from $12.29 to 48.09 cents over the same period, with a 13% annual growth rate. However, total debt per share has seen a modest increase over the last 4 years, rising from 34.24 to 39.56, a 3.7% annual growth rate. Still, it's not alarming when you consider the overall financial health of the company. Profitability analysis. Next, let's talk profitability. Ulta's return on assets, ROA, and return on equity, ROE, are both strong indicators of the company's efficiency in generating profits. For the trailing 12 months, ROA stands at 22.81%, compared to a 10-year average of 17.25%. Meanwhile, ROE has seen a dramatic improvement, currently at 58.86% versus a 10-year average of 35.55%. Ulta's margins, whether we're talking gross, operating, or net, have remained steady but are showing signs of improvement, which is always a good sign. Valuation. So, how is Ulta Beauty valued today compared to its history? Well, based on several key ratios, Ulta actually looks pretty cheap right now. The price-to-earnings ratio, PE, is currently at 14.86, much lower than its 10-year average of 33.28. This could indicate that investors are expecting slower growth in the future, but it might also present a buying opportunity. The price-to-book ratio is also lower at 7.92, compared to the 10-year average of 9.02. Similarly, the price-to-free cash flow ratio has dropped to 20.38 from an average of 52.94, and the price-to-operating cash flow ratio is down to 14.06 from 20.5. All these lower ratios suggest that the stock might be undervalued relative to its historical performance. Finally, the PEG ratio, which compares the PE ratio to the company's expected growth, is currently at 0.77, much lower than its 10-year average of 2.61. And remember, with PEG, the lower the better. Let's wrap up our analysis by looking at solvency, basically how well Ulta Beauty is managing its debt. Since 2020, the company's debt-to-equity ratio has improved, falling from 1.2 to 0.82 in 2024. Long-term debt to total equity has also decreased from 0.89 to 0.70 over the same period. This is a positive sign, as it shows the company is becoming less reliant on debt to finance its growth. So, what's the bottom line? Ulta Beauty looks like a compelling stock right now. It's been delivering strong growth in earnings per share, backed by consistent revenue and profit increases. The company's aggressive share buybacks have boosted EPS even further. On top of that, the stock appears undervalued when we look at its historical valuation metrics. Warren Buffett and Berkshire Hathaway are known for their long-term, value-oriented investment strategy. Given Ulta's strong fundamentals and attractive valuation, it's easy to see why they've decided to add it to their portfolio. As always, do your own research before making any investment decisions. But Ulta Beauty definitely looks like it's worth a closer look. Thanks for watching. If you found this analysis helpful, please give it a thumbs up, subscribe to the channel for more stock analysis videos, and hit that notification bell so you don't miss any updates. Let me know in the comments what you think about Ulta Beauty and if there are any other stocks you'd like me to cover.